Welcome to my office where we get to have a bit more of a candid chat about what is going on around the world. Now, what's going on right now is stock markets. They're just absolutely dumping. There are no buyers in sight. And we've seen a real shift in sentiment from a flight for safety into metals for now a flight for safety into oil and the US dollar, and metals are of course dumping. And not only that, just the general demeanor and sentiment overall taking a massive nosedive. Now, I guess that shouldn't really come as that much of a surprise for anybody who's been following along with the macro cycle and how cracks have been building up now for a number of years, and now they're only just widening further and becoming a bit more obvious to the everyday person. And I guess the everyday person can't help but know there's something wrong when they're getting so heavily affected financially, with just the general squeeze with inflation and now fuel and everything just going up. And now, of course, this is more so related to people who aren't in the countries which are affected by war directly, but now everyone is getting affected around the world, whether directly or indirectly. Now, while these things have been brewing for a very long time, we're only at the real beginning of this whole crisis playing out. We're pretty much just getting a taste of what's to come, or at least that's my view with how I see this playing out. And we can actually get a pretty good insight into what is going to materialize or develop by analyzing the different asset classes and price charts, which again is what I do on my main channel. But what we're seeing when it comes to the asset classes and prices of things, so commodities are up and likely going to continue further, which is going to put further pressure on just people's everyday essential needs, such as food and petrol. We're already seeing that play out, and I think, like I said before, we're just at the very beginning of it. So what does it mean and what do you do? Well, it's going to be different for everyone, but I think if you're not in the game of trading and investing, then it's just really important to get your house in order, make sure you've got a secure job, you don't want too much debt, and just make sure you're able to withstand a higher cost of living, as things will likely go up anywhere from 10 to 20% just at a guess. And that's more so just for everyday things that we need, not including rent and mortgages, which are likely going to go up too because of inflation, interest rates going up and repayments going up. Everybody feels the effects of that, even if you don't own a home, because we typically see rents also go up unless the imbalance changes where rents may in fact go down, but mortgages not necessarily. Now, something else I've been saying a lot is how tops are a process. And by that I mean the tops of major cycles can take some time, and we may even head back into a period of things seeming like they're not too bad, which is where a real false sense of security comes in. Because if that does happen, things kind of settle down or seemingly settle down over the next 6 to 12 months, then that can lead people to believe that everything's fine, the dust has settled. And not only that, it can actually suck more people into the market, getting them in at the very worst time if they're not already in the market. So like I said, tops are a process. There's no guarantees of any of that happening. But what we're seeing right now is that real pinch taking place across the board. So it's one thing just to sit here and talk about all of these things, but in terms of practical steps, I think I've given you a few things to think about when it comes to putting yourself in a good position, or at least not in an overly stretched position. But something we haven't yet seen is the actual economy turn down in a big way with mass amounts of layoffs across different sectors and industries. But that is also typically what happens as we begin to see the unemployment rate creep up. So in terms of practical things, if you are on wages, you just want to make sure that you are irreplaceable, or at least you're not going to be one of the first ones to go. And you do that by becoming extremely valuable to your employer. Now, it's going to be different for everyone depending what industry you are in, but maybe that's just something you want to consider, because typically we will see the belt tightening across the board in all different sorts of industries, which means people's jobs do become at risk, which is something we always see as the unemployment figures start to tick up. Jobs are getting lost somewhere, and typically they begin to get lost across the board as there's just less money flowing around, less expansion in businesses and all the rest of it. Now, if you have your own business, then now is not the time to be expanding and taking on large amounts of debt. At least that's my opinion. You do whatever the hell you got to do. You know your business and industry better than anyone. But personally, I wouldn't be looking to get into excessive amounts of debt or going on to expand in a huge way just until we see where all the dust settles with everything going on, because there's just so many unknowns right now. And when it comes to cycles, the stuff that I pay a lot of attention to, we're more likely at the peak of a cycle as opposed to a new expansionary phase. So of course, I'm not a financial advisor. Take all of that with a grain of salt. Just maybe there's some things you want to be thinking about and looking further into if any of that did resonate with you. So I'll leave it at that for this one here. We're going to be going through the charts and analysis on my main channel as we look at where the funds are flowing across different asset classes, how people are getting positioned and all the rest of it. But that's it from me. I hope you have a fantastic weekend. Wishing you more health, wealth and happiness. And until next time, I'll catch you then.